Have you ever noticed how Bitcoin pumps out of nowhere? No news, no Twitter hype, just one massive candle, and it's gone. You blink, and you've missed the move. But here's the truth. These moves aren't random. There's a hidden signal the smart money watches, and it often shows up before price does anything. It's called open interest. And once you understand it, you'll never look at the chart the same way again. Let's decode it. So what is open interest? It's the total number of open futures contracts on a market, like Binance or Bybit. When someone opens a long or short position, open interest increases. When they close it, it decreases. It doesn't tell you who's buying or selling. It doesn't show volume traded. It simply tracks how much money is sitting in the game, waiting to move. It's like seeing how many chess pieces are still on the board. The more pieces in play, the more complex and dangerous the next move. Here's why open interest matters. When OI rises, it means more people are entering the game. More positions, more leverage, more tension. But that tension has to go somewhere. That's why traders watch OI the same way a surfer watches the tide. When it starts building, a wave is coming. The trick is in the combination open interest plus price equals the signal. Here's how. If OI is rising and price is rising, the trend is strong. New money is backing the move. If OI is rising but price is flat, the market is coiling like a spring. You don't know the direction yet, but volatility is about to explode. And if OI is rising while price is falling, that's often a trap, a fake out, a liquidation setup. Someone's about to get wrecked. This is how the market sets up those sudden squeezes. It builds tension, then snaps. Let me give you a real-world example. On June 4th, 2025, Bitcoin was trading sideways around $105,500. Not much action, boring market. But traders watching open interest noticed something strange, a sharp spike of over $800 million in OI on Binance futures. That's not small fish, that's whales moving in. And sure enough, just hours later, Bitcoin blasted past $106,000, hitting a high of $112,000 by the next day. That OI spike, it was the warning shot. It told you the market was getting loaded. And when the move came, it was fast, violent, and clean. So where can you check open interest for yourself? Try CoinGlass.com, free and easy to read, or dive deeper with Glassnode if you want historical trends and pro analytics. Binance Futures also shows it in real time, if you know where to look. And hey, if you want a visual walkthrough, comment Glassnode tutorial down below, and I'll make a dedicated episode. Now here's a key tip. Never look at open interest in isolation. It's powerful, but only when paired with the right tools. Combine it with funding rates to see who's paying to stay in position. Volume to detect conviction behind moves. Exchange inflows, outflows to track smart money entering or leaving. These layers together give you a real edge. It's like night vision for the crypto jungle. So what's the takeaway? Open interest tells you when something is brewing. It won't predict the direction, but it shows you that pressure is building and a move is coming. Whales use it, funds track it, and now so do you. This is how you stop guessing and start anticipating. If this breakdown helped, hit like and definitely subscribe. I've got more alpha coming in the next episodes. Up next, we'll decode funding rates and why whales sometimes pay millions just to hold a position. Drop a comment below if you're already watching open interest, or if you're ready to add it to your strategy. This was Crypto Decode Dash, where we simplify complex crypto signals without the noise. If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research. Stay sharp, stay early, stay informed.